It's Monday, the 19th of July 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, economic growth forecasts cut by up to 1% as business leaders offer to help with the vaccine distribution to try and get a grip on the COVID outbreak. Plus, the Federal Coalition's popularity tumbles on the back of the slow vaccination rollout. Rio Tinto delays new mines because it can't find workers. And F45 gym owners become multi-millionaires as the company lists on Wall Street. Our lead story today, business leaders have offered to help with the coronavirus vaccination rollout across the country as the crisis escalated over the weekend. A phone hookup of about 250 business leaders on Saturday with New South Wales Treasurer Dominic Perrottet discussed the impact of the hard lockdowns in Greater Sydney and Victoria. The bosses of Coles, Woolworths, Wesfarmers, Cochlear and Mirvac were all on the call, according to Financial Review. Over the weekend, there were 222 new community-transmitted cases in New South Wales and 35 new cases in Victoria. Victoria is due to come out of lockdown tomorrow, but that could well be extended because some of the most recent cases were in the community while infectious. The New South Wales government imposed much tighter restrictions, particularly on the retail and construction sectors. Both sectors are big employers, and the new rules will have tremendous flow-on effects for the rest of the economy. In the case of retail, some of the hardest-hit regions in southwestern Sydney are home to distribution centres, and without a flow of people in and out, stocking shelves would be affected. Market economists are putting the cost of the lockdowns at close to $10 billion, assuming a 7-week Sydney lockdown and a longer than 5-day Victoria lockdown. That could mean the economy going backwards this quarter. In overseas news, it's a big week for Wall Street with several large companies reporting second quarter earnings results, including IBM, Netflix, Johnson & Johnson, Twitter and Intel. Major indices on Wall Street last week fell for the first time in a month on fears of higher inflation and the growing number of COVID cases across the country. European markets also ended lower over the weekend. Federal Reserve Chair Jerome Powell was appearing before Congress over the weekend and was asked what he thought was the most significant systemic threat to financial stability in the US or globally. While China or COVID-19 or inflation might have been the expected response, Mr. Powell said the thing that worried him most was cyber risk. Oil prices were lower over the weekend and Brent crude is fetching a little over $73 a barrel. The good news is that overnight OPEC agreed to add 400,000 barrels a day to production from next month. That should keep a lid on price rises. It was a bad weekend for COVID cases globally. The United Kingdom is due to lift all restrictions today, but on Friday and Saturday it recorded 50,000 cases on each day, including the country's health secretary. New York State reported more than 1,000 new cases for the first time since mid-May. Thailand and Singapore have found new clusters, and at least 2 Olympians in the Tokyo Village have been found to be positive. There's now been 190 million recorded cases of coronavirus and 4.1 million deaths. Locally, the federal government has fallen to its lowest electoral position this term amid the COVID lockdowns and frustration with the rollout of vaccines, according to Newspoll in the Australian newspaper. Voters are losing confidence in Scott Morrison's management of the pandemic, with support for the Coalition and Labor deadlocked at 39% respectively. On a two-party preferred basis, Labor is ahead 53 to 47%. Mr Morrison still remains the preferred Prime Minister by quite a margin, something that Labor leader Anthony Albanese needs to make inroads into before the next election. The auction market in the 2 capital cities affected by the lockdowns remained decent over the weekend, notwithstanding the number of houses going to market fell. Both had clearance rates of around 77%, according to preliminary figures from CoreLogic. Adelaide was the standout city with a clearance rate of 83%, while Canberra was at 82%. Rio Tinto said a number of new iron ore mines would be delivered later than planned as a result of labour shortages in Western Australia and a more consultative approach to Aboriginal heritage. It came as the miner reported its weakest first-half iron ore export performance since 2015. The drop reflected heavy rainfall, maintenance disruptions, as well as the labour and consultations-based delays. The mines are under development are worth more than $4 billion. The annual Edelman Trust Index is released today, and according to media reports, 8 out of 10 Australians trust their employer, but only half trust the government and even less the media. Having faith in whoever employs you is a trend that emerged strongly during the pandemic. The index is global, and Australia's trust in government sits around average. Interestingly, the two countries where trust in government is highest is China and Saudi Arabia. And the float of F45 on the New York Stock Exchange late last week has turned the founders of the business into instant rich listers. The group listed and is worth $1.6 billion. The group was founded in a gym in Sydney's Paddington, grew and attracted investors including Hollywood star Mark Wahlberg, and has now sold more than 2,800 franchises in 63 countries. One of the founders, Adam Gilchrist, not the cricketer, who has stayed with the company, is now worth around $500 million. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning. And if you'd like more detail and more stories, search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today we're talking about what the frenzy of deals on the ASX means for investors. I'll be back later with the afternoon market report. I'm Sean Aylmer. Have a great day.